Newer investors are more likely to own cryptocurrencies, and they're overwhelmingly choosing digital assets over more traditional.
Here's another good idea. Why don't we use our software expertise to build something cool in the Bitcoin blockchain world? We're in year one or year two of commercial Bitcoin banking. Okay, we haven't even, like, what's the date? It's like the early part of August. You know, our first Bitcoin acquisition was August 11th or something like that. So we're not even 1 year into it. And I think when you get to 3 to 5 years into the world of Bitcoin banking, the security issues, the regulatory issues, the due diligence issues. Can you show me a Bitcoin bank that's taken $1 billion of Bitcoin and generated yield consistently for 10 years in a row without any kind of mishap? No. How about 5 years? How about 3 years? So the point really is you're taking 100 times as much risk and it's 10 times as complicated to get 5% more. So let me turn it around a different way. If I'm going to go ahead, like I wouldn't take 100x more risk, okay, to start with, right? That, like, as a fiduciary, that doesn't make sense. Let's assume that it wasn't any risk. It was just 10 times harder. Well, why would I divert the time of my legal team and my finance team to go jump through 10 times as many compliance, accounting, security, regulatory, and process hoops when I have other things I could do at the time? Why don't I just go and raise another $1 billion and buy Bitcoin that's been yielding 120% a year for a decade? Wouldn't it make a lot more sense to leverage up or to acquire more of the thing that's going up 120% a year than it is to divert everybody in order to get it to go up 123% a year with 100 times as much risk and 10 times as much complexity? So it's let me offer a different example. It's like, do you want to buy 100,000 acres in Vegas and just own it and you could do it overnight? Or do you want to carefully huddle with 100 architects and plan 150 hotels and the septic systems and all the traffic light systems and all the elevator systems of all the casinos and hotels and restaurants in Vegas? Complicated and risky and distracting and dilutive. You know, we talked about pursuing good ideas. Like, Dan, I don't regret any bad idea I ever pursued because I never pursued a bad idea. I regret all the good ideas I pursued because they were dilutive to the great ideas. So here's a good idea. Why don't we get some yield on our $1 billion of Bitcoin? It's a good idea. It's distracting, dilutive, and potentially going to create problems. Here's another good idea. Why don't we use our software expertise to build something cool in the Bitcoin blockchain world? Yeah, we could, but what? We've got a $500 million business, which is very profitable, and we're the best in the world, and we've got 30 years of experience in it, and we know that there's nobody better than us. We can keep doing that and grow that and cultivate that, or we can look for a new application of software. But if I had a Bitcoin for every time somebody came up to me and said, I have an idea for a new app, I mean, there's 100,000 ideas for a new app. They all require software. I got plenty of ideas. I think the one thing I learned in business over my 30 years is it's a lot easier. It's a lot easier to acquire something. You can acquire, or you can create a piece of software, or you can buy a business. That's really easy. It's much harder to be competitive in the business. Can you actually launch something and be the best in the world at it? That's harder. And then it's really, really hard to commercialize something. So the standard of commercializing something is I have to ship the product, be the best in the world at it, and then I have to be able to upgrade it continuously forever for less money than my customers are willing to pay me to use it. So can you actually profit continuously from something while growing it? Because if you can't keep making a profit while you grow the thing, then even if you're the best in the world now, you won't be the best in the world in a decade. You'll get squeezed out by somebody else. So I think when you look at all these businesses, the standard of, can I come up with something cool to build? That's very low. I can come up with 100,000 good ideas of things to build. Can I be the best in the world at it? I don't know. I mean, I won't know until I've done it for 3 to 5 years. And then can I grow it continuously against the person that is the best in the world at it, right? The decision to compete is a decision to be the best in the world continuously forever at a profit at something. Okay, that when you think about it that way, it gives you laser eyes, right? It gives you focus, because you realize that it's like you can go into any city in the world and start a restaurant. Can you make money? You'll know in 36 months. Will you be there in 100 years? Will you be there in a decade? Right? That's very hard. It's probably 10,000 times harder than the first stage of just launching the thing or doing the thing. That's why there's a 99.9% failure rate on mobile apps or new ideas or websites. In fact, I think most people underestimate the true failure rate of all these business ideas. I mean, to say that 99% of them fail is to understate the issue. It's more than 99% failure. And so you got to really find a way to bring a massive asset to bear in such a way that you'll be the best in the world. And then you have to be ready to fend off all comers over the course of the next decade. When I talk to all these Bitcoin companies that they're VC financed, they're like, oh, I just raised 100 million. I said, well, how much Bitcoin do you have? They said, oh, they look their head down, like they won't let me invest in Bitcoin. I'm like, well, that's pretty foolish. Why don't you take the 100 million and put 80 million of it into Bitcoin? Because if the business fails, you'll probably still succeed. And if the business succeeds, then you'll still succeed. And on the other hand, if Bitcoin fails, you're not going to succeed no matter what you do, right? There's no point in being the world's best Bitcoin something or other if Bitcoin goes to zero. So the problem, I think, with the VC is you're taking capital that could be invested in Bitcoin, and you're investing it downstream 1, 2, 3, or 4, layers away from Bitcoin, and you're taking all of that execution risk and competitive risk when you could just own the underlying asset. You raise money, and your charter is you're required to take a diversified interest in a market basket of securities, right?
Right.
That's your charter.
That exactly is the mandate.
What if you took all the money invested in one company? Are you allowed to?
I'd be fired.
So you understand? You have to, right?
Absolutely.
Because your investors wanted to buy a diversified portfolio of securities, I assume.
Yes.
Right?
Yes.
You probably can't even buy the underlying. Can you buy corn or oil rights or land or the underlying Bitcoin?
No.
No, because you have a charter.
Correct.
Okay, so it's totally legitimate. But you understand, you raised all your capital with a strategy to invest in a diversified portfolio of securities. And maybe you've got a tighter strategy. Maybe your focus is on the crypto world or the whatever world, right? Well, my strategy is to run an enterprise software company that builds the world's best business intelligence software. And my second strategy is to acquire and hold Bitcoin. And that's the first 2 paragraphs, or the first paragraph of my 10K. If you read it and pull it, that's what it says.
Sure.
Well, that's a very clear disclosure. If you're investing in MSTR, then that's what you're expecting to get. My job is not to diversify your portfolio to 100 other securities. My job is not to hedge the risk. In fact, if you had $100 million and you wanted 1% exposure to Bitcoin, you might prefer to own MicroStrategy that says we're going to be 3x leverage Bitcoin than own a Bitcoin ETF, which is 1x leverage Bitcoin. And you certainly don't want to take your 1% and invest it in a company run by Yo-Yo Smith that sometimes buys and sometimes sells Bitcoin and hedges it for you, but doesn't tell you what they're going to do, and they're not predictable. Because if Bitcoin goes to zero, then you're going to lose your 1%. In which case, if you're 20% exposed, you only got 20% of the upside. If you're 1x exposed, you got the full upside. And if you're 3x exposed, you got 3x the upside. So you understand the number one question is, what exposure am I buying? I'd rather own the company that's got the most exposure. And the second is, do I trust them, and do I understand their strategy? I don't really want someone that's flaky, that's going to change their strategy and blow with the wind, because it makes it impossible for me as the portfolio manager to construct my portfolio rationally. If you're in the aluminum business, I want you to do aluminum. And if you're going to be in the timber business, I want you to buy timber. And if you're in the Bitcoin business, I want you to buy Bitcoin.